Hello, everyone. I hope traders and investors alike were green on Friday. Well, we have a pretty interesting week. Not a lot happening on the data front. Definitely not a lot happening on the earnings front. But Powell is speaking on Wednesday at 9:30 a.m. Now, this must be, I'm guessing, probably a banking conference, and it must be an all-nighter because he's speaking again at 2:30 a.m. on Thursday morning. So we do get to hear a little bit from Powell. Not sure if it's a question and answer, if it will be just a prepared speech, but we will definitely be ready for that. So the futures market has pulled back on the all the Russian issues that are happening with Wagner, um, and it looks like the pre-market futures are betting for a red open in the morning. So, we will see all that could definitely change. The market is in a pullback right now. It does look like a healthy pullback, but we're going to talk more about that as we get going through the charts. Keep in mind that we are coming into the 4th of July weekend. We have a full week this week. Next week, the stock market will close at 1 o'clock on Monday. So 1 o'clock Eastern Time, New York Stock Exchange time. We will be closing at 1, and Tuesday will be off for 4th of July weekend. So just keep in mind the volume may be affected towards the end of the week. There could be people, could some of the bigger traders may be cutting out a little early on Friday, maybe even Thursday to take an extended weekend. This is why some say go away in May. So this is why liquidity does pull back. There is a lot of the bigger, the bigger guys put the into some of these funds and stuff. They pretty much just turn the algos on and take some time off. So that's why the liquidity does ease up this time of year. So let's just get into the charts and we'll talk about things as we go through the charts. So you can see here on the SPX, the SPX weekly, we do have a bearish Arami. There's quite a few charts that we do have a bearish Arami on the weekly. So let's see what we get as we look through them, and we'll talk about what we expect. The breadth on the New York Stock Exchange is pulling back considerably here. Still, you can see price action there. Mac or hit. This is our 5 histogram. Your normal MACD is a 9 histogram. So just gives us a different look at it. And you can see it's turned negative already. USD, big pop on the dollar. This using the blended candle method. This is a very bullish pattern. I like the way it closed up here. Got a tower bottom down there. We could see a move up on the dollar off of that. VIX Green Day on Friday, extremely beat down here. That's really a broken instrument right now. Crude, we did have a hammer candle here off of the Bollinger Bands. Let's keep an eye on that. We may get a day on energy, if we could see some crude pop, could see crude pop and get some opportunities on some of our energy names. Apple, nice move up on Friday, pushing right back up off that 9. Chart's holding in well. You can see here the 15-minute chart, big push up. We did pull back some and pull back a little bit in pre-market as well, and that Russian news was coming out. Gold holding in, tried to push on Friday, actually pulled back, but still a high close candle, barely, but looks like it's getting back into the Bollinger Bands. Our advanced decline lines are turned down, looks very weak, especially small caps down there. And some of the small cap issues are going on with the banks. So we heard a lot about the banks last week and wanting to increase their capital that they have to keep on hand. And the reason why that hurts banks is because it hurts things like dividend payments. It hurts things like, them doing share buybacks and stuff like that, which investors like to see because things like that actually drive, shares up. So, but all that's affected if the banks have to keep more cash on hand, and they won't be able to do things like that. So that's why, that's one of the reasons why banks are getting hurt here. So AMC moving down, we do got a gap there. Kind of what's expected. We had that very non-textbook head and shoulders pattern. Even broke back up, retested the same level of this shoulder, and getting a breakaway gap to the downside. AMD sideways action on Friday. You can see Amazon, nice day on Thursday with an inside candle on Friday. The daily chart looks great. ARC is pulling back here. We are below the 9 and the 20 moving average. You got your 50 down here. So if we could pull back to this 50, and just saying, if we pull back to this 50 and bounce on the 50 and go higher, it's still a healthy uptrend. You know, we have to pull back at some point and put in higher lows. That's what uptrends do. The question is, what do we do? We'll put in a low. Where will the low be placed at? And then what do we do after the low? Do we push up and put in a higher high after the low, or do we push up and put in a lower high? So it's all part of the a trend change. And right now we are still in an uptrend, but we will be watching closely for signs of a trend change. So we know change. It can be right in the middle of the day. We go from bullish to bearish. It's what we do. We're day traders, and we're here to make money. Nothing else is doesn't trading should not be anything else. We start trading for the money, and it turns out, for a lot of people, it becomes more of a hobby and wanting to hold this and wanting to hold that. But if it's anything more than the money, then you really can't consider yourself a trader. It's more of a hobby. So you got AMD here. AMD has filled this gap. So let's see what it does. This is one that we've had on the radar. This gap was formed on the NVIDIA gap up with NVIDIA when NVIDIA released their AI chips, and so they were expecting AMD to do the same, and AMD's AI chips will not be ready. They're not for sale right now, and the market did not like that. They released a lot of good information in their AI, so-called AI Premiere, but no AI chip in that Premiere. There was a lot of good information. The market wanted to hear that they wanted to hear AI and they wanted to hear something for sale right now. They got neither, even though there was a lot of great information, and definitely do expect more upside on AMD in the future. You can see AMD weekly, so this nice pullback got that gap fill, but we pulled right back into the daily nine. Very double topish up here with those candles, and then finally breaking it for a move lower. So let's keep I mean, that's a pretty dark cloud coverage candle there moving down. So that was a good clear signal. That's not a textbook dark cloud cover. Did not cover 50% of that candle. And I prefer three quarters, but that's not a dark cloud cover candle. But that bearishness in that candle give you a great sign. Come back down. See how we act off that weekly nine important spot. A firm breaking down, moving lower. You can see Amazon's intraday pretty choppy. We did get some ranging, but kind of, possible head, shoulder. So, not surprised if we do pull back at least in early part of tomorrow due to the Russian stuff. And, we're not definitely not here. We're traders, so we're not here to talk about Ukraine. A lot of that just seems like a big distraction. Just weird, and just seems like a big distraction. So we could see some other stuff out of that, but I don't think, not all of it's market moving news, so we don't really try to cover it. Amazon weekly, we need to watch that 200 on the weekly. It's still a very nice looking chart, and exactly what we expected. Here's Apple, weekly chart. I know it's a bear market. Boeing, this just bad news. Every time they start, this chart wants to start pushing up. They get some good news, bad news just follows it right after the good news, and it's just hard for Boeing to make a decent move. And you have to respect that. Boeing is a day trader until it gets some better action on that chart. Can make a very good day trader, and Boeing pays very well. So Boeing's a nice paying stock with the proper options. But it's a day trading asset because it's just all over the place. A BTU coming back down to the nine. Watch this off that nine. Got to take this 50 out if we're going to move higher. So watch that daily 50 there. Uh, Bitcoin, what can I say? Bitcoin weekly, Bitcoin daily, holding in well up here, waiting for the nine, back into the Bollinger Bands. A healthy price action, waiting for the nine, see how it acts. We get back to that nine, or if it holds that area and waiting for the nine to catch up. So Cisco, we added this week. You can see Cisco's got a nice cup here, come up, tested this area, and looks like it's pulling back, possibly pulling back to put in a handle here. If you look at Cisco's a weekly chart, you do have a bearish Harami. You can see the little cup here as well. It's not as perfect. Actually looks more like a tower bottom if you didn't have the cup drawn, but you can see the rounded bottomish action. Like I say, this does look more like a tower bottom here, trying to push up out of it. Um, but you can see the bearish Harami here that's pulling back. And if you look at your daily, it all makes sense. We're pulling back. So, 30% or so of this move is what we would be pulling back. A lot of people are looking for 50% right now, but the average pullback for a cup and handle is 30%. So it can pull back 80%. If we can put a rounded above bottom on it, we're still going to watch it like a big handle. But your average pullback is 30%. So watching for a reaction here to finish off that handle and maybe see if we can push back up. And CVX, very inverted cup and handle there, bearish. So we got communication sector still looking pretty strong here, holding the 50. We did lose the 9, but still trying to push up. The one thing about the communication sector is I know Facebook's carrying that sector. Nice breakout there, but Facebook has a lot to do with that. Staples, we had this double bottom. We had this flag tried to push up, and it's just slamming right back down. Just a lot of market issues happening. Not getting a clear sign of rotation anywhere. Like every time we start to rotate, it just fails or something else could come along. Just those major names that we've been watching, those are the only ones that have been really, really, really reliable. A lot of other stuff, they're day trades. They've been great day trades or even great short-term swing trades. The market's had a nice run, and a lot of areas and other areas, when we start to see breakouts, they just collapse. This is why we seriously don't recommend just, buying what hasn't run yet. We don't recommend buying what hasn't run yet. So please don't do that. Cost looks really good back above the 9. Nice looking chart there. DraftKings, nice looking chart. Time it breaks down, it pushes back up. Not the best price action structure there, but it's going up. This DDOG, this is a very interesting chart. So this thing is, we broke out of this contraction zone, come down, tested the center, put in a H cell pattern, broke below the pattern, and basically we come down here and found support at the bottom of the contraction zone. See what happens here. If we lose this area, this thing could dump. Lilly pushing higher. We talked about it before. That's a great passive income chart. Google with options, a chart like that, you can make a lot of extra income, and it's not that hard to do. It takes a little time to get things, to work properly, and which basically takes something called back testing, and then you can make a lot of extra money. Charts like that. Google, nice, small, but we got this nice little gap down here if we do pull back. It does look like it's been trying to pull back. You can see the MACD, but price is holding in well right now. So when I see the MACD falling like that and the price holding is really good, it's moving, has been drifting lower as you can see, but MACD is pretty, slamming down here. And price holding in just tells me this MACD just needs to come down, reset, so price can go higher. Putting in basically a base. A base is nothing more than a cup or a handle or a head and shoulders pattern. It's just another pattern. Just doesn't have a fancy name, or you can't always get the greatest shape out of it. But when you see the market chopping in an area, it's just putting in a base, waiting for the next move. Building the next setup. IWM, you can see moving lower there on the daily or the 15-minute chart. Qs broke below the 9. Going to watch the 20 for support. If we do continue lower, our MACD is crossed. Once again, we got a nice move. We talked about we got our goose head here. We had a nice move up. We could use the pull back a little bit. It's healthy. If you can continue to go straight up and go straight up fast, then you usually get bigger pullbacks. When it comes, you get a large pullback. It may not come for a while, but when it comes, you get a large pullback. I would rather have decent, healthy action up and down without the large pullbacks. Makes it easier to trade, and you can get great ranging days, and everybody makes money. Q's 15-minute chart. So you can see we got this gap up here. We pushed up, and that one wick did touch the gap and got rejected there on Friday. That's why gaps are important. We need to know where they're at. QQQ weekly, we do have a bearish Harami there as well. So we could pull back. Mara, keep an eye on these because Bitcoin's so strong. Definitely keep an eye on these. We watching this really tight contraction zone, pushed up out of it. This candle closed up over top this area. If we can free the rest of this volume profile area in here, we can move a lot freer to the upside. Merck still pushing higher off that L shoe. Meta straight up, just grinding higher. Another passive income chart. And Meta. Now this action here on Friday held in well and trying to move lower. See what we look like in pre-market. Definitely held in well. We took out the basically the highs here, and then Russian news started coming out. But that one, Meta did hold in well on that news. Microsoft in between that 9 and 20, it's got to clear that got to clear that area. You can see Microsoft here. So this 15-minute chart, you can see the small shoulder, head, shoulder. So we could open up tomorrow and try to move lower. So just saying, we may not confirm that. Microsoft, Weekly chart, bearish Harami. We're seeing a lot of those after a nice move up, seeing an inside day. It's, that's not that bad. So, not being super bearish on the market yet. I do think the market does need to pull back. A healthy pullback would be fine for the market. We do got some areas where we could work on filling some of these gaps as well. Nvidia, nice push up here. You know, struggling with the daily nine. MACD looks like it wants to roll over, but great looking chart. Looks like it does need to pull back though. And you got NVIDIA here, gap up above us here as well. You can see we pushed back up, tested the gap, and got rejected. NVIDIA intraday on the weekly chart. NASDAQ pulling back there, lost the daily nine. Netflix, we've lost a daily nine here. Look for the 20 for support. Here we're coming back into a previous level of resistance, which will now act as a level of support. So if we lose the 20, look to come back in and retest that little contraction zone there. The Q's still holding this monthly candle. We did pull back on it a little bit and not really surprised because look where there's resistance at and we pulled back right to that area. So, if we even if we just close here, would not be surprised. If we got this big U, we got a really nice cup here. Would not be surprised if we could close in this area, for this month and pull back to put in a handle for a move higher. I mean, we talked about that last video or maybe the video before that, but that's what's possibly happening here. And your MACD monthly is just getting fired up. Roblex gap up above us. That is resistance. You can see their support here. Kind of treat that area like a trading range. If it was to lose this 200, look for a move down. Confirmation below that 200, maybe you could probably move down to this 3420-ish area down here into some support. SPX, we talked about that, losing the 9. We're going to look at the SPY here in a minute. SoFi lost a 9, trying to push back up off this 20. You can see, we gapped down. Sellers took it down. Buyers come back in, raised it back higher. So one to keep an eye on. Will you get the candle closed really strong? No wick on that candle, so it tells us that it closed on the highs. We could see some action there tomorrow. The diamond breaking down, holding a 20. You got the 50 below that. The diamond coming down to the 9 on the weekly. That's the Dow 30 if you didn't know what the diamond was. The SPY weekly, we had that bearish Harami. SPY, this is the monthly. We have moved. We did come up and just about test that area and pulling back. We know the Qs is stronger here, so we're not surprised. The SPY lost a 9, coming back into the 20. Nice cup and handle, nice push up. We could pull back. You can draw a line, just like what's on the thumbnail. You can draw a line right up through here. We can come in, touch that, and still be healthy. Put in a higher low, and then look for another move after that. It's all part of trend trading. A SPY holding in on intraday. Square got this little trading range here in this area. I would like it below this candle, the range of this candle as well. We did push up, so the range of these two candles, draw that out. I'm look for a move. We can take that out one way or the other, bullish or bearish. I don't want to be too bearish on this yet, to be honest. A shop, little cup, trying to pull in, see if we can put in a little handle there, maybe. Tesla intraday, so it pulled back in pre-market, started to push here, come up here, put a little tower top in, and then pull back. Provided some good opportunities throughout the day on Friday. XLK lost a 9 there as well, seeing the same setup on a lot of these charts. Tesla weekly, bearish Harami, just an inside weekly candle. Tesla daily, you can draw a trend line across that, look for a trend line break. Maybe it's not perfect. Thursday's candle tried to push back up. Friday's candle just giving us a bearish Harami. We need to get up here and put in a new high if we're going to move higher. It actually looks like, that MACD looks like we could pull back here and once again be a healthy pullback. Uber, strong chart, still looking for a move off of that 9, still, paying the bills there. Walmart struggling to hold the 9. Bank struggling. Been hearing a lot coming out from Powell and the other uh, Feds, the other Fed governors, the other Fed speakers, we've been hearing a lot about commercial banking, commercial real estate, hearing a lot about the big banks, just a lot of stuff going on there. So banks are, trying to push here and then breaking right back down. Just so much being spoken in that space right now. And like I said, I think we have a big banking uh, coming up. I believe that's what Powell is speaking at, is a banking conference. So we'll see, and that could not only just move the whole markets, but it could really fire the banking sector up as well. So we're definitely going to be watching that. Bonds are not doing a lot here, but overall they've been trending higher, even though we did gap up and move lower. Overall bonds are moving up, not fast. It's not pretty, but it's happening. Um, IWM here. So this is IWM's weekly. We have a evening star bearish candle there, and IWM daily. We are rolling over here. We've lost to 9. We've lost to 20. MACD's turning bearish. So we're seeing, and the banks have a lot to do with this as well. So seeing some weakness there. Definitely going to keep the small caps on the radar this week. Well, I hope you find this helpful, and I'll see you in the trading room. And please remember, discipline is the key to your success in trading. Have a great day.